The company on our radar today is Thyrocare, and the company's top management is here with us to discuss the business outlook going forward from here. Rahul Guha, the MD and CEO of Thyrocare, now is with us. Many thanks for taking the time out for us, Mr. Guha, and sparing time for us. We wanted to understand the current, the business outlook that you have from your company. Of course, we've seen the peak, go by in COVID-19. What is the business outlook right now that you have? Has it completely reduced your exposure to COVID-19 and the revenues that you were getting from there? Has it completely minimalized now? What is the next big area where you're getting the revenues out from now?
COVID, I think, is from a testing point of view, at least behind us. If you look at our quarterly results, also we no longer split our results between COVID and non-COVID. So I can safe to say COVID is out of the base. Overall, if you look at our business, our offline business or our franchisee business is doing very well. Last quarter, it grew by about 16-17%, continues to grow very strongly, and that is largely driven by the back of the tailwinds that we are seeing in non-COVID testing. People, as a result of COVID, have understood the value of good quality, affordable testing, taking good care of their health, and are coming back to the stores at least to see how they can better manage their health care. Just to give you an example, in the fever season that we've just been going through and will continue into October and November, we have seen fever testing levels at levels we have never seen before in the past. So it's very clear more and more people, when they have fever or any kind of illness, are looking to the testing providers for solutions on how to better manage their illness. So I would say our offline business is doing well. Our partnerships business, which is largely partnerships where we service revenue for many of the online partners, that has been flat, and I've talked about it in our analyst calls as well. And that is largely because, as you would have seen a lot of news, many of the online players have actually reduced discounting, and that has affected their volumes, I would say, particularly over the last quarter. But as it normalizes, I expect that to also pick up towards the tail end of the year.
Mr. Guha, I look at your margins on the operating part, and they're slipping probably for one reason, that the diagnostic space is now getting intensely crowded. For those having mobile phones, I can assure you, every day we get calls to get 70 tests done in 1,300 rupees, get 101 tests done in 1,500 rupees. With this kind of a competitive structure in place for the industry, how do you see long-term growth coming in for shareholders who want to perhaps buy this dip in your stock price?
Look, as I said earlier, when it comes to our margins overall, you have to look at it at a normalized basis, because there is an ESOPs charge that keeps coming quarter on quarter. But our normalized EBITDA margin has been improving both quarter on quarter as well as year on year. So at least from our financials, I would say we are definitely on the right track and growing. When it comes to competitive intensity, yes, if you go to Q2 and Q3 of last year, it was quite competitively intense. But we have seen two things happen. One is actually the shift back to offline. So if you look at our results slightly more in detail in Q1, you would see our offline or our franchisee business actually grew north of 15% year on year, and also sequentially. And it was almost at a non-COVID high that we have ever seen. So it's very clear that while there is a lot of competitive pressure on the online space, the offline space is seeing good tailwinds for growth. And why that might be? For Thyrocare, actually only about 15% to 20% of our business comes from metro and tier 1. 80% of our business comes from tier 2 and beyond. And that's where we are seeing a lot of our growth for our franchisee business. That is actually driving almost all the growth of our franchisee business. When it comes to competitive intensity, a large part of the competitive intensity comes from online players. What we have seen is their footprint typically is the top 5 to 7 cities in the country. Actually, very few of them go beyond that footprint. So for you also receiving these SMSs of these kind of offers, actually it's largely because you're sitting in Mumbai. As you go into even Nasik or Nagpur, actually you'll see a big fall off of the kind of offline offers, and people go online offers, and people actually go offline to the centers where there is a very good physical presence and a backup there. So I would say yes, competitive intensity had been at its peak in quarter two, quarter three, but has eased off, over a period of time. But largely, the tier two markets in India have largely been unaffected by these competitive pressures, and Thyrocare has enjoyed the
Sure.
tailwinds of that growth. When it comes to online, also, just to complete the point, if I look at the pricing and the amount of discounting online, actually that has come down substantially over the last couple of quarters. One of our sister concerns, Pharmeasy, which actually Thyrocare supports with diagnostics, you would see actually year on year they've raised prices by almost 18%. And that is true for almost every online player in the country. There was a report recently that benchmarked the price increases online. It ranges between 15% to all the way to
Right.
50%. At least that's what that report says. And so I would say, this discounting model, I
Yeah.
think many people have realized it's unsustainable from a margin point of view and have pulled back from that.
Okay. Mr. Guha, since you said that, you are focused on the offline space and that is where you get your maximum business from, any expansion plans, both organic and inorganic? You said that, your franchise model is giving you more business right now. What would be the expansion strategy? What are the kind of investments that you're planning in your offline business? Where all are you planning, geographically as well? And will it be in organic fashion or inorganic fashion now?
Our expansion plans in India are largely organic. We actually are present very strongly in tier two and in some part in tier three, but we plan to expand much deeper into India. Our mission is to ensure affordable, good quality diagnostics is available to every Indian. As a result, we have expanded our lab network. Today, we have 31 labs in the country. 2 years ago, we had 15, and we continue to expand deeper and deeper into the country to ensure quality diagnostics is available to one and all.
So how many labs do you want to have, like by the end of, say, FY25?
I think we'll be happy. Today, if you drop a pin anywhere in the country, there will be a Thyrocare lab within 150 to 200 kilometers. And our goal is to, that is the kind of turnaround time that we aspire to. So I would be happy with 35 and 40, between 35 and 40 labs over the next 2 years. I think our network expansion is largely done. Now it's really about market expansion.
Sir, one more question before I let you go, and that is on what is your revenue split when it comes to your business from B2B, and what is the revenue that you get from B2C? Since you're talking about direct consumer, direct to consumer, you're talking about your offline businesses, but you also have a lot of corporate tie-ups as well. Could you tell us that?
Yeah, we call it our franchise business and our partnerships business. The rough split is two-third, one-third. So two-third of our business is franchisee and one-third of our business is partnerships, which is all our corporate partnerships, online partnerships, and the like.
Okay, got that. Thank you very much, Mr. Guha, for sparing time for us and discussing your business outlook with us. All the best for the coming quarterly earnings, and we shall catch up again after your earnings as well in Q2.
If you like the video, do like, comment, share and subscribe.